The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 13th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in 877-927-6648. Internationally, 727-445-1044. You can send me an email, steve@tfnn.com. Inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show, and it sounds like it's bombs away. Right now, we got the Dow trading down 91 points at 20,500. S&P is off 9 at 2335. NDX 100 off 8 points, trading at 5368. Composites off 14. Russell's down 9. Semiconductors are just down a point. Interesting after having a pretty nasty day yesterday. New York Stock Exchange, Wilshire down. The transports are down 53 points. Gold is up $11. Silver's up 22 pennies. Seems to have percolated a bit. I saw some flash across my screen that the Air Force dropped a biggest non-nuclear bomb in Afghanistan, trying to take out a true bunker buster, I suppose, out there. So that spooks the markets just a tad. 300 down in the Dow today. No chance. No volume inside this market right now. Leading the charge here to the upside, you've got BAP, Credit Corp Limited. BAP is a ticker symbol. Chipotle, CMG, that's up $5. Applied Optoelectronics up 5. Tal Ed Group up 4. Broadcom up 3. To the downside, Amazon's leading the charge off nearly 10. Hey, how about this? Apogee Enterprises. Must have something to do with the moon. That's off $6 or 10%. Priceline off 5. SVB Financial off 3. Sherwin-Williams painting the town red today off 360, nearly just 1%. Let's go begin by taking a look at, let's look at daily. Let's go step back and forth through everything. Let's take a look at the daily equity futures contracts. Right now, you've got the ES Mini targeting the level of support. The level of support is the daily bottom of its box, 2330, and a couple of ticks out there. Right now, the low has been 2331.75. That low is going to hold. Yes, that's right. You heard it here. That low is going to hold. That low should hold. How about that? Let's go ahead and blow this chart up on our screen out here. And if it doesn't hold, then it's going to give us an important message. But if we take a look at the box, I'm going to turn off the weekly box. So I thought I was going to there. The weekly boxes are off now. You can see in that daily box out here, you can see how the bottom of the box and the center, which isn't in the center, it's down towards the bottom of the box, gives this a bullish structure out here. So you're down into support. We go ahead and turn the weeklies back on. You've got long. I'll turn the dailies off this time. You're into long-term support on the weekly. The ES Mini should close back above 2336.75. 2337 out there. That's what it should do. Will it do it or not? Well, it sure should. It's given you every signal that that's what it wants to do. If we go take a look at a 30-minute chart out here, let me turn off a couple of things. What the ES Mini has been doing, let me hit the update button, see if it's continuing to do it. It has been moving lower with less relative energy. Now, in this last run down here, I don't have the stretch of that bar. This is just a double test low out here. So we'll go take a look at a 10-minute chart and try to gauge the volume. But the ES Mini right now, the 30-minute chart, created one of its classic bottoms, just as it's created a classic top up here, did a little triple test, a little triple Lundy, if you're watching this on TigerTV. It appears that we've got the exact same pattern going on inside it at the bottom, while price is coming right down into support. So let's go flip over, take a look at a 10-minute chart, right? We're just going to nail this thing one at a time. Whatever information is revealed to us, we will use. So now let's go take a look at a 10-minute chart. Let's go take a look at these tests out here. You've got one test back at about 10:50 on the 11th. That would have been 2 days ago. The volume there, 72,000 contracts, but let's go ahead and pull that little box down. 72,000 contracts. That was tested earlier this morning with, much earlier, 640. So 6,000 contracts. We're not going to use that. We're just simply going to go ahead and take the swing point with 72,000, compare that to this little flush of the toilet to the downside at 1 o'clock that had 43,000. So what is it telling us? Sorry, not enough volume, bunker buster bomb or not, to go ahead and push through those levels out there. So everything coming into support, that is the solid message of the ES Mini. Let's go take a look at the NQ out here. I sent out an update. At, now this is going to be the bearish side, but I sent out an update, right around 11:30 or so, when the NQ was trading right up here, right up at its highs for the day. And the market update said, okay, it's going to be the NQ that's going to go ahead at this stage here, should stall and come back and test Stevie's red line. Now, during this 30-minute session here right now that we're in, it's tested it, and it is below that. So you can see this price oscillator right out here in the right-hand panel, still just slightly above zero. But this is not a positive outcome, but there's still 17 minutes left in this 30-minute trading session. So we'll go ahead. If, in fact, price is able to close above about the 53.37 level, 53.77 level, about 9 points higher than where it is. That will be a clear rejection of price, and that'll say, okay, the next leg to the upside is in place. Even if, in the case of the NQ out here, even if price moves lower, what it will do is, number one, form a seventh wave move to the downside. It may also expand this price relative strength divergent pattern that is out here. But right now, all it's done is a retracement, a little deeper than it should have. But let's come back to it at the 1:30 time frame, because it's really going to be all about the NQ. You can see here from a retracement standpoint, well, you can see it when I go ahead and draw that in on the chart out here. Let's go measure the retracement from low to high out here, and we're going to be just at about the 0.786 level, 53.65. Volume on that last bar, though, last 10-minute bar, 13 to 1 o'clock to 1:10, was 8,800 contracts. And what's that going against? Well, that's going against a total of 13,000. So even the NQ is suggesting, is communicating to you and I, not enough volume on this push to the downside. We should see price get rejected. And that's going to be real key to going back to that 30-minute chart for the NQ. So what do we know in this last 8-9 minutes out here? Prices are coming back to support on the light volume. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So there's chatter in the Tiger's Den about Jimmy Hoffa. Jimmy Hoffa. You know, the day that he was disappeared out there. This is when I was just a young chap. It was when I did a number of odd jobs as a kid out there. One of them was painting parking lot stripes. It just so happened that on that day, we were painting the parking lot stripes of the AFL-CIO office in Detroit. Now, that's not where he was abducted from. It was in West Bloomfield at the Fox and Hounds, or I forget which of those restaurants it was. I have to look it up, but it was one of those owned by that company out there. So I guess the gist of the Tiger Den chat is the bunker bomb is to go try to find Jimmy. Was that what it was? In any event, Dow's off 81. S&P is down $8 out here. Had a request from Mary. Mary, thanks for sending an email asking if I would go take a look at the ETFs, the index ETFs, and do an assessment on. Yeah, just do an assessment. So sure. And Mary, you didn't say which of them, so I guess that means we should do all four for you. So let's start off by taking a look at the QQQ series ETF. We're going to see that so far about 11.4 million shares has traded. Yeah, we can call this somewhat holiday-ish type of trading since markets are going to be closed for this tomorrow. And for Good Friday. And that volume equates to about 20 million shares. So a very light volume day in the marketplace out here. Yesterday was 15 million. The previous swing point, or the previous session from 3 days ago, was 33 million. The swing point itself has 18.5 million shares. So about the same as that swing point out here at 131.07. Mary, what you need is a rejection of that swing point. You need to see the Qs close above 131.07. If it can do it with lighter volume, then that says, okay, you go ahead and make a run for the highs. If it closes inside that session, not until it rejects price does it give that message, which means that price inside the QQQ could go down and test the 129.40. I would be paying more attention, like you and I are, on the intraday charts inside the equity futures contracts, because they, quite frankly, give us more information than the index ETFs. But I also understand that most of you just have the index ETFs. And so it's from those charts where we say, hey, guess what? Everything lines up for these lows to not be punched through, for there to be a bounce, to see the market meaning green by the end of the day out here. If we go ahead and we take a look at the SPY, we look at the SPY right now, that's trading out at 233 and a quarter, volume about 35 million shares. That equates to about 61 million shares or so, trading into the swing point with 87 million shares. In order to reject that swing, needs to see it close above 233.92. Doesn't look like it's going to have the volume. Then you'd have a test of that level, that swing point, for 3 trading sessions in a row on light volume. Even if price closes below it, you can see the bottom of its box out there. It's TAS Daily. Those would be the blue levels. Says that there's significant substantial support at 232.88. Unfortunately, we're not really going to use the market profiles here as much as we're reliable and rely on them as much as we are inside of the equity futures contracts out there and the intraday charts. If we go take a look at the IWM, the Russell 2000 out here, trading out at 134.07. Volume is 14 million shares. Now, that 14 million equates to about 24. And the swing point has got 35, March 27th. What the market is doing, it is just communicating to you and I, left and right, that is doing everything it can to hammer out its next bottom. It's just what it's doing. You may not want to hear it. I don't know that it's going to bust out the highs. It should, probably will. But it's just giving us the information that it just simply doesn't have the energy, bunker bombs or not, to bust out the lows. There's been every piece of potential information, rumor or reality, whatever it is, to try to go ahead and bust out these lows. The market just can't do it. So what does that mean? Hey, you can't bust them down? The market will go ahead and try and bust them to the upside. If we go take a look at the Dow Diamonds off 77 cents, volume behind that move, 1.7 million shares. That's the equivalent of maybe 3. 3 is going into 4.5. So you can see volume-wise, index ETFs. Today isn't the holiday, although trading desk shut down probably about a half an hour ago. The martini lunches are pouring out here, and I'm sure the message was don't let things get carried away. So things will not get carried away. And we're just seeing all the proof. Hey, is it more bearish for the index ETFs to trade lower today with light volume? Or is that bearish? Yeah, it is bullish to see that happen, coming into these swing points with light volume. So, Mary, I hope that assists you. I see a request in here to go take a look at gold, the usual suspects, gold, the GDX. Let's start with the GDX. Up 18 cents. Trading out at 24.75 out here, extending its gains, headed up to its swing point out here from the trading session of February 8th. That means that it's headed to a price level. Well, let's go ahead and get this out on the screen out here. It's headed to a price level somewhere between 25 and a quarter, 25.27 to be exact, and 25.71. The volume there is 41 million shares. Over the last couple of days, we've done 88, then 64 yesterday. Today's about 33 million shares. 33 million equates to approximately, from a straight line basis, about 54 million shares, and where it's going into is 41. So even though volume's dissipating just slightly, we're pushing into this swing point with volume. 25.35 is going to be an area that needs to clear. Once it does the 25.35, 25.71 level, then it's onward and it's upward and it's 28.27. Does that mean that it won't stop along the way? Well, it could. Will it? I don't know. It will if we see the Japanese yen give us a signal, a bullish reversal signal, as it completes its one-to-one A to B equals CD to the downside. So for those of you that are trading, come Friday evening, because at this stage here, it had the potential to form a bullish reversal signal. Hasn't completed the exact one-to-one, but it's close enough. But either way, it doesn't really matter. You've seen a little bit of a doji style candle as we speak right now. If we don't see any bulls show up, if we do not see a bullish reversal candle, then the yen is going to head down to the 106.62-ish type area. That'll go ahead and put some nice giddy up and go inside of the mining equities, inside of the metals, those being silver and gold. We'll continue to put energy into the 30-year Treasury. Hey, we haven't talked about the 30-year Treasury in a couple of days, have we? We did talk about it when rates were going, when Yellen was doing her rate thing, and you and I just went ahead and we took a look back at, hey, the last time that we had an extended period of time, believing that this is going to be an extended period of time for the Fed to increase rates out there, that the last time that we saw the 30-year not move lower, we saw it move higher. It's just following along that same pattern. And when I say higher, I mean a lot higher from where we are trading now. You might say, what say you, Steve-O, with regard to that? Hey, so the yen, just getting back to gold and everything else, with regard to the yen out here, watch this come Friday. Because if there is some type of reversal at this 1-to-1, that will not bode well for any of the metals or bonds out there. But at this stage of the game, nada, not the message. Dow's off 82, S&P down 8. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Here come the bulls. Here come the bulls out there. So it was Marcus Red Fox, not Fox and Hounds out there. I don't know if the restaurant is still out there, but, when you used to go there, you could say, I'll take Jimmy Hoffa's seat. No, I'm just kidding. You couldn't say that. Nah, I should. Pretty poor humor out there. Piss poor humor. So let's just cut it out. All right, so you got the Dow off 76 points out here. Gold. So let's go. Oh, I mentioned bonds. So let me just show you this cool bond chart. Of course, I think it's a cool bond chart because it's my chart out here. So if we take a look at the current contract, that's what we're looking at as we speak right now, you're going to see a beautiful consolidation pattern. That is the long rectangular box on my screen. You can see prices moving lower, doing less relative energy. We can see here that the price oscillator right here at the bottom portion of my screen was getting right to the zero level. Price did what it was supposed to do, which was come back and test TV's red line. It has done it on 4 occasions out here just a couple of days ago. When you come back and you test it and you reject it, it's a little trampoline effect. Now, that trampoline effect was dealing with a significant line of resistance. That was the top of that consolidation. Consolidation no more. So what does that mean? That means the 30-year Treasury is headed up into the 158 level. That becomes its measured move until we see otherwise as to where price wants to go. The consolidation patterns are really great out there, especially when they get broken. Now, look, from a technical analyst standpoint, every technician knows that you break out of a consolidation, and that's a breakout. We also know that a failure is failing to hold that breakout level. So at any point in time, if the 30-year comes back and tests the top of the consolidation, that's okay. But if it comes back and it tests it and it gets back inside, then that is bad news bears, especially because at that stage of the game, we'll be below Stevie's red line. But what you know and I know is that the 30-year Treasury has a rising price oscillator above zero. It wants to head to the 158 level. Totally will freak most people out. I don't even know what the net short position is on this. Maybe somebody out there does. I haven't looked at it for a couple of weeks out here. Haven't really needed to, because this pattern was saying it all to us. And that's you and I. Okay, so that's the bond chart out there. With regard to Goldilocks and silver and everything, let's go take a look at gold of $9 out here. What is it doing? Well, in the case of gold, what isn't it doing? I mean, it has taken out resistance, every form of resistance that you and I could find out here, right? Trend lines, market profiles. I mean, the whole 9 yards out here is what it has done. Daily, weekly profiles out here. So now what you've got is an A to B equals CD to the upside, right? That price projection, we'll just go ahead and start with our A point down here on February. How about December 15, 2016? B point out here is on February 27. C point down here on March the 10th. You've got 1336. 1336 takes us back to that election night, November 9th level. The high there was 1347. So where is, somebody says to you at the dinner table this weekend, hey, where do you think gold is headed? You can now say, yeah, that's a simple thing. It's headed to 1336 to 1347, and you will be Johnny on the spot. Now, with regard to silver, a slightly different message out here. Silver up against some significant, where is it? How come? What's the deal here? What did happen to that? Let me open up the chart, but I want to put, look, actually, I don't even need to put the profiles. I will, but I don't really need to, right? We take a look at this chart here. Where is it that you will draw a wall of pièce de résistance? When you just do it right here, right smack dab, right around there. Wouldn't that be one level? Wouldn't this be, in essence, a second level out here in the 1854? By the way, the first level is about 1880. So here is where silver is really trying to prove itself. Now, there's a secondary I'm trying to prove it myself standpoint, and that is the daily profile. Am I correct on that? Yeah. Oh, no. Hey, I take that back. It's already done that. So it's bullish out here. You might say, what do you mean it's bullish out here, Steve-O? I had to go look for a chart here so that I can show you. Let's do this. Let me Let me minimize that one. Let's pull this one out right here. Let's go take a look at silver. Just give me a second here. I got so many different files for this to go through. And we'll go ahead and we'll pull it up, and I'll show you exactly what I mean. So it's got some resistance. You know, if you're flying on the jet out here, we're not going to haul you. Here at TFNN, we don't haul people down the aisleway. We treat you with respect. We serve you lobster and whatever else it is that you might want out here. But in the case of the silver out here, the bullishness here is we've got a rising price oscillator above zero. This was the chart I was looking for. You can see that Stevie's red line is very important, 1830. We can see that when silver formed a nice little top out here, very close to the top. You had a nice little Tom DeMark sequential count back on February 23rd. You had a nice little TD setup out here back on March 28th. That has now failed. We're back above this little bear sash candle. That is a Tom DeMark support, or in this case here, resistance trend line. So we know that we're trading into resistance out here. It just says you've got a little bit of agitation going on. As long as that yen is unable to form a bullish reversal signal, then the setup for silver is also very positive, and then it too will go higher. So if somebody says to you this weekend, hey, where do you think silver is headed to? Other than you can say to the moon out here, we're going to say, I tell you what, it's probably headed into that 1961 to 2037 level, and I would say you would be right on. Okay, so that's gold, that's silver. You know, the Dow is off 70 points right now, right? We know that it didn't have, there was volume schmolium to the downside out here. The next real important level for these markets, assuming that the bounce continues, you don't want to assume anything. Oh, you get a nice little 30-minute hammer candle down there as well. Just a number of messages inside the charts out here that the market is trying to form a bottom. They're just like all over the place. I can't tell you where the next key touch point is in silver, not silver, but in the ES Mini 30-minute chart. But we'll be watching that as long as the NQ, right? We're going to go back to that NQ 30-minute chart out here, because this is how you and I call the markets, right? We can see, we got to see price now get back up above Stevie's red line. That'll then set up the A to B equals CD to the upside on the shorter-term chart on the 30-minute chart out here. Now, it was a 0.786 retracement. It came right down to one of those Tom DeMark support lines out here before it found support. You know, so it's just likely to be a 1-to-1 A to B equals CD to the upside that it will fulfill out there. So I hope you're taking some action on this. For those of you that are intraday traders out here, the patterns are they're spectacular out here, like a good bottle of sake. Yeah. That's what we need on Terrific Thursdays here. We ought to just do sake lessons, right? We each get a nice bottle of sake, comb pie. Maybe we have some nice sashimi brought in. What's your favorite? Do you like that yellowtail belly out there? Good. Steve Rhodes with TFNN. Be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So Bill writes in, hi, Steve. Can you tell me where CVX will head in the next few weeks? I would like to go long. Thanks, Bill. Bill, thanks for writing in. Let's go take a look at CVX. Right now, trading down into its TAS weekly profile. So, Bill, I can give you one number to focus on and pay attention to, and that's the price level of 106.68. You really want to see CVX hold this level. Any close below that this week is going to be a bearish type message out here, because this is the second weekly profile. All right, we have one that was in place for about 3 weeks out here. This one has been in place for about 2 weeks now. This one formed below the prior one. There's no really inclination as to whether this is bullish or biased from a structure, because the center of the box truly is in the center of the box out here. So the only other thing that we have to go with is the prior swing point and any other volume pattern that we might see to the left-hand side of the chart. Well, the swing point has 6.4 million. You've done 3.7 as we speak right now. 3.7 on the Richter scale equates to about 3.7. It's 143. So, you know, a little over 4 hours, about 6 million shares. So 6 million is going into 6.4. So where would you buy this? Here's the potential problem you've got with CVX. I say potential problem because what you'd want to be looking at, Bill, I think is, well, what is oil doing, right? So in addition to looking at CVX, it's coming back to support. That's ordinarily a good thing. But the question is light sweet crude coming back to support? And if it's not, is that a problem? So you'd want to go take a look at that. And if we take a look at light sweet crude, and we take a look at yesterday's action out here, what you're going to see is at the natural level of resistance, the top of that little waterfall cascade that began on March the 8th, that high out there is 53.43, I believe. Let's get our data box, I'll say. Yeah, 53.43. Price got up to it a couple of days ago. Then yesterday, you saw that the high was exceeded from the prior day. The low was exceeded. Was the low exceeded? Maybe I'm wrong. Maybe that was a visual thing, and I just simply 52.70, 52.71. No, I missed it by a penny. Nonetheless, you got a bearish engulfing candle out here, so you're really right up against resistance. Here's what I want you to do. I want you to really watch light sweet crude. Ideally, what light sweet crude would do is pull back, not by much, 52.21. That's a brand new daily profile that is formed out here. It's bullish for sure because price is above that. Or if, in fact, price takes out the most recent high from yesterday, that being 53.76, then you'll see a run to the upside out here, and maybe something even beyond that. But with regard, so I would go back, Bill, and take a look at CVX again. Try to time it with regard to. So we'll first go back and see how it correlates, right? See how it correlates to light sweet crude. There's probably a pretty decent correlation there, and try to get both of those calls lined up. But you know what? You may not even have to do that if you see it close today below 106.68. Your question was, where is the buy? I'm saying that it's probably not here right now. In the case of CVX, is there any other pattern that is in play out here? Well, there was this pattern that was in play that made it look like it was a good buy versus good buy. And that was price was moving lower, doing with less relative energy. You had the requisite. I didn't like that. I stole that word from Basil. I didn't even know about that word until, I started listening to him. So it had the requisite bullish. So I'll say thank you, Basil, for that. It had the requisite bullish engulfing candle that formed. Then price got above Stevie's red line. Now today you're back below it. You're below zero. It doesn't really look good for CVX as we speak right now. And then, if you don't have the oil, so then where could CVX pull back to? You just got to go back. The only other thing that we've got out here is going to be some prior swing points. And so that's going to say it comes all the way back into, in essence, the October 27th area, right around 99.92. So I know that was a long way of getting there, but we got there. Now, I know we have another email here. This is from Jim from Palm Harbor. And Jim, thanks for the call yesterday. Would like to know if support at 23 will hold, and this would be my likely buy point. I'm not in the ETF. This is the XLF. Okay, so let's go take a look at the XLF for Jim out here. The XLF is trading at, it's doing a test of its swing point out here. That's what it is doing as we speak right now. That swing point being the trading day of March 27th, 103 million shares traded hands. You've done 77. Mathematically right now, that sounds to me like you're coming in too hot. XLF maybe is going to do around 113 million shares out here. So, Jim, let me turn on the weekly profiles out here. Let's just go see where they're at, and then I'll go back to your email to make sure that I get the well, that's interesting. I've got it turned on, and I've got nothing showing. That's so weird. In any event, you are saying $23. No. So we're at $22.98 right now. Is now the time to buy? No, I mean, if I had the confirmation on the 30-minute patterns, then I'd say, well, maybe. But even here, the bigger problem is that you're pulling back into the swing point with light volume. Even a rejection, close about 22.98. Come Monday, you should get another chance of a test of that area out here. If this fails, then what could be occurring out here inside of the XLF is an A to B equals CD to the downside. That, my friend, would take you down into, and you're asking for a buy price. Well, you're looking at 2167, 2104, 2024. Those are the three. Well, one is the 1-to-1. That's the 2167. The other two are just natural extensions of that lightning bolt pattern out there. And we don't know which one will be fulfilled. We just simply check on it as price is heading down to those levels. If I were a betting man and the XLF is going to bust through these lows out here, I'd be betting around 20.25 to 21.04. So, Jim, thanks for writing in. Thanks for the call yesterday. And I say at this stage here, you just got to be patient. Just be a bit patient out there. Who else do we have as far as? No, I don't see any other emails that are out there. Let's go take a look at some individual stocks. Let's go see what is going on with Chipotle out here. CMG is the ticker symbol. Up 655, about 1.4%. This has been in a nice, steady, rising, lower bottoms, higher highs out here, and looks pretty nice. Volume today happens to be 595,000 shares. Last time that we were at these levels, you saw about 900,000 shares. So this is looking pretty good out here for Chipotle. Maybe their worst days are behind them, and it's time for them to let out the secret sauce. Where's Chipotle headed to? Good question. I would have to say the next level is in the 540 range. You're trading at about 560 right now. Let me go ahead and put Chipotle on my other system, CMG being the ticker symbol. See what we've got here. Oh, well, go ahead, finish it. So Chipotle is beginning to move higher with less relative energy, right? This pattern here trumps them all. And we probably can't even use that word anymore. I don't want to be sued if we're using trumps them all. But you can see the price moving higher do with less relative energy. Now, that alone is not a reason to sell or say that this is going to reverse, but you need to see that pattern go away. But as long as it's here, if we were to see the cavalry show up, give us a bearish reversal signal, get below Stevie's red line, then that would say retracement is in play. Chipotle traded 464.47. Steve Rhodes with TFNN. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
It's that time of the year again, and that means the Spring Tiger Dollar Sale is back. TFNN has just announced that our best Tiger Dollar Sale of the year is back this week only. Right now, you can get up to a 50% bonus on whatever you spend on Tiger Dollars. Tiger Dollars can be used for any TFNN newsletter or service and are a great way to add extra savings to any TFNN product. Tiger Dollars never expire and are fully transferable. Whether you're a current subscriber or plan on purchasing anything in the future, this is a great time to get your Tiger Dollars. Remember, this sale ends Sunday and we're closed on Friday with the market, so don't delay. The Spring Tiger Dollar Sale with the potential to earn a 50% bonus on your purchase only comes around once a year, so don't let it pass you by. For all the details and to get your Tiger Dollars today, visit the front page of TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. You know, you got to love that spot VIX index, the futures contracts, all of them, the whole kit and caboodle out here. And one of the things that I love to keep an eye on is the 10-day rate of change. Now, of course, you know, we like to take a look at the one-day rate of change, you know, when it's greater than 10%, even sometimes when it is less than minus 10% out there. But one of the other areas that we pay attention to is what is that 10-day rate of change out here? And when it starts to get up to Stevie's magical 40 level, which it did yesterday, and now it has turned down just slightly. The question I would pose is that where the market forms tops or bottoms? Well, you already know the answer to that, right? You don't ask a question that you don't already know the answer to, and the answer is yeah, it forms bottoms out here. So that's where we're at. It's just one of several reasons why I suggest to you that what the market is communicating to you and I is that it is doing everything that it can to form a bottom. And in this case here, to move higher, back up to the highs, maybe even beyond those highs inside the S&P 500, which I believe is in what, the 2397 level out here, 2400 even, Steven, 2400.98 to be exact out here. So that's only about what, 70 points higher or so. So keep a close eye. The other thing with regard to the volatility index, not just do you have that high reading on the 10-day, you've got the spot VIX trading at 1588. We've got the May VIX trading at 1502. Oh, really? You've got the June trading at 1507. Really? You've got August trading at 1563. Those three contracts trading below the spot VIX index, another signal. I know you bears don't want to hear it. I can't change the patterns out here. That would be disingenuous. It is what it is. And then all the way into December, you're only trading out at 1720 out there. So them be the patterns that are in play inside the volatility index out here. What else can we take a look at in the next 2 minutes? Because I don't see any requests out here. I don't see anything inside the Tiger's Den. Amazon. Why don't we go take a look at Amazon, AMZN? And I'm not saying necessarily today is the day. There's certain signals that I'm watching for, and if it's not today, it's not today. It could be Sunday, could be Monday, could be Tuesday. The point is that the market is trying to form a bottom. That's what's important out here. The top deal is done. It's over with. We've had the top. It just wasn't able to do much in the way of price destruction out there. With regard to Amazon, right now trading right back into the center of its box at 886.91. Volume today, 202 million shares out here. It made it high. It made it high with 7.5 million shares. There's no big deal with regard to the retracement. That doesn't mean that it won't retrace further. It should retrace further. It should pull back into about the 857.46 level. Does it have to? No. Will it? I don't know. Can it? Sure. If it does that mean there's something wrong? No, it's just a normal retracement in this what we'll call extraordinarily big bull market out there. Apple, APPLE. No, that's not the right one. APL. That would be the correct one out here. What is it doing? Well, Apple is relatively strong. When do they come out with earnings? Somebody out there knows. I know our polar bear knows out here. Today, trading with about 10 million shares out here. Just no big deal inside of Apple. Shoot, when it broke out last, 33 million shares back on March the 28th. So no big deal in Apple. I guess that's it, folks. We're out of time. So, look, have a great extended weekend out there. Recharge your batteries. And we'll be back at him on Monday. Stay tuned. David White, our polar bear, is up next, and then the Tom O'Brien Show. Have a great weekend, folks. Happy holiday, and we will see you on Monday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.